All right, we're going to go ahead and get started, everyone. I want to welcome everyone to the webinar today on SBA franchise changes in the franchise registry. We really appreciate all of the great feedback that we've been getting from lenders on this topic. We, of course, are subject matter experts when it comes to franchising, so it is our business to know everything related to the franchise business model. We recognize, as well as you do, that it's a unique form of small business franchising. There's some advantages to that, but there's also some challenges, and we are going to continue to be a resource for you in that. We welcome your questions and comments throughout the presentation. Please type your comments in when they come to mind in the chat box to the left. We have our marketing person here, Nancy. She's going to be helping us field those questions and collate those to me. So just go ahead and send those over. If we're going to try to get to as many as we can, but if we're not able to answer any of those, we are going to be sending out the answers to those questions and questions we've had in previous sessions as well at the end of the webinar. And we are also recording the webinar, so we'll be sending a link to the recording for everyone that registered. So if you have any colleagues or anyone that couldn't make it today, we will have a copy for everyone after the session. Let's go ahead and jump right in. Let's go over what we're going to be discussing today. Today we're going to cover mostly how the franchise changes in the SBA SOP simplified some things in the process, but also created some uncertainty, and also where it shifted some risk onto you as the lender, where there was issues that were previously covered by the SBA. We're also going to show you how the franchise registry is making this process simple, and how the franchise registry is going to help you mitigate some of those risks that have now been shifted to you. Over the next hour, we're going to address what changed in the SBA SOP in January of 2017. We're going to look at the most recent changes to that update, which were posted in February of 2017. And then we're going to take a look at some of the lender reaction, some franchise reaction to some of the changes that we've seen. Then we're going to dive into the franchise registry and look at all the tools that we have to help you with the SBA process, as well as some of the great underwriting tools and search tools and all the great stuff that's available on the franchise registry. So a lot of content today, but hopefully you'll all find it useful. I thought it would be helpful to start off by taking a look at sort of the timeline of Sba Reviews and kind of how we got to where we are today. For those of you that remember the SBA franchise review process prior to the financial crisis in 2009, the SBA was only looking at a handful of issues in their review process and what the SBA calls franchise affiliation. And the majority of those issues in 2009 had to do with the transfer issue, and that meant the ability of the franchisor to grant consent to be able to transfer or sell the business to the borrower. The SBA was making franchisors sign an agreement that said that they would not unreasonably withhold that consent to transfer, and that was the primary issue that SBA was concerned with prior to 2009. After the financial crisis, as some of you may know, the SBA experienced an unprecedented number of losses in their portfolio, and a lot of those had to do with franchises. And it was at that time that the SBA started to expand their reviews to not just look at transfer issues, but to look at a lot of different other issues that had to do with affiliation. And the affiliation is basically whether the franchisees or borrowers have the right to profit or sustain a loss commensurate with their own efforts. It has to do with the degree of control and making sure that your borrower is able to operate as a small business person and receive funds through the SBA program as it was intended. So more rules came into effect at that time. Because of the losses, they were redoing the program. SBA started reviewing other documents for SBA requirements. In addition to the franchise agreements, you had other guarantee documents and lease agreements and collateral assignments of telephone numbers, things that you'll find in the franchise disclosure document were also being reviewed. And that happened at around 2011. So from 2011 to 2017, most of you are familiar with using the franchise registry to prove eligibility. And the SBA was doing reviews of those franchise agreements individually. So each franchise brand would submit their franchise disclosure document through us on a yearly basis. And the SBA would do an individual review of those addendums or those agreements, and then create an individual addendum for each franchise brand. And that was the state of affairs up until January of 2017. At that time, the SBA released an update to their SOP and released a one-size-fits-all addendum. that some of you folks might know is Form 2462. That's SBA Form 2462. That's a one-size-fits-all addendum. So they said, hey, we were doing these reviews for affiliation for all of these different franchises individually. And they said, okay, we're going to issue a standard addendum. We're going to boil down this question of affiliation, right? This question of, is the borrower able to profit or sustain a loss? We're going to boil this down to a 4-bullet point addendum, and we're going to make all franchisee borrowers sign that addendum. That was in January of 2017. So the process had changed. But there were some issues that franchisors had with that addendum. We're going to look at some of those as we go through, and they'll become apparent. And there was some feedback about that addendum that was passed to the SBA. And so in February of 2017, the SBA issued a notice amending that SOP to allow franchisors to use their own previously approved addendum from 2015 or 2016 in lieu of or instead of, and it was their choice, of the standard addendum from which is Form 2462. So they expanded it a little bit to create an extra option for franchisors. We're going to show how we're addressing that, what the difference is between the two, what your requirements are in each case. We're going to break everything down nice and easily for you. But because the SBA is simplifying the affiliation process only, the SBA SOP is in many ways going back to the review process that was pre-financial crisis. So we're going to take a look at all this for you and show you exactly why. So that's the overview of what we're dealing with here today. Let's jump ahead now and look at what are the main differences in what SBA is providing in the standard addendum and what they were providing in the past, and now what the changes are that you're going to have to determine. So let's look at 3 main issues. First, we're looking at determination on whether the business is a franchise. And what that basically means is when do we use the standard addendum, right? We need to know, okay, we have this process of making a brand or concept eligible, but when do we use it, right? Because there are brands out there that have franchise agreements, but there's all these different types of documents out there that you may have run into. There are license agreements, dealer agreements, job agreements, all these different types of things. So in the previous SOP, the language in the SOP was very clear. It said that regardless of what the agreement document was, whether it was a franchise, license, dealer, or jobber agreement, it said that if there was a product, service, or trademark that was critical to the borrower's business operation, then the SBA was going to require a review for affiliation and go down this process. So the SBA was making it very clear as to what it was. And they basically, under that umbrella, everything under the sun really fell in there as long as there was product, service, or trademark that was critical to the borrower's business operation. In the 2017 SOP, what the SBA said is we're not looking at that product, service, or trademark standard. We're going to adopt the FTC's guidelines as to whether or not the brand is a franchise. So the first thing they said is we're going to make it up to the lender to say, okay, you look at the concept you have. If this concept meets the FTC definition of a franchise, then you need to apply the standard addendum or the previously approved document. So this is a change because now lenders are having to determine whether or not this brand meets the definition of a franchise. Now, most of the time it's pretty cut and dry, right? If the brand's a franchise, they have a franchise agreement, they file a franchise disclosure document on a yearly basis. These are guidelines that are set. But there are some other concepts, for example, FedEx, that do not exactly want to be classified as a franchise, yet they may have some documents that would have fit the SBA's definition in the past. We're going to be looking forward and showing you how we're going to be helping you determine this on the registry. There's a section for every brand that will tell you whether or not the brand meets the FTC guidelines of a franchise. But this is one of the issues that SBA would determine for you in the past. The second thing to look at is determinations on business eligibility. Now, the reason we have a green check in 2016 and kind of a check and an X in 2017 is because what SBA has done with the standard addendum is they've now addressed this question of affiliation. But within or under next to affiliation, there was the larger issue of Sba eligibility. Now, in the past, those two terms were kind of used interchangeably, but in fact, they were separate. Affiliation has to do with this topic we've been discussing so far, whether or not the borrower has the ability to earn a profit or sustain a loss commensurate with ownership and operate as a small business person. But there are other business eligibility issues, such as business model eligibility, gender, religious discrimination issues, all these other issues, and these are now up to the lender to determine. So in the past, the larger task of determining eligibility was certainly in this process of reviewing for affiliation. And in doing that, the SBA would also handle these other affiliation or eligibility issues. Meaning if you found a brand to be eligible and listed on the franchise registry in 2016, you knew the SBA had already reviewed all those other issues. Now we are doing those reviews for the franchisor on the franchise registry and making sure that you as a lender have what you need. So there's a little bit of a change there in the process. The standard addendum did make things easier, but also left some other things up to you in what we call the other SBA issues. And we're going to go into those. And again, those include but aren't limited to business eligibility, gender and religious discrimination issues, things like that. We're going to go into a specific example of that and how to address those on the registry. And then the third part is these negotiated solutions for these other SBA issues. So in the past, if the brand did have a size issue, and I guess I'll let you in on an example that we're going to use later. There's a brand called Curves, which is a fitness franchise that's marketed towards women. In the past, to make a deal eligible, and they had this noted on the registry, the borrower had to sign an affidavit stating that their location, their build-out, had changing rooms available for both men and women. So this was an example of an issue that didn't require a change to the franchise agreement per se, an addendum to that document, but was still required was an extra document that had to be executed to make sure that the brand was eligible. That's an example of a streamlined solution, and that's no longer available with the standard addendum. There was a give and take process that happened between the franchisor and the SBA to address some of these issues. So that's a change this year. Brands that had those SBA issues in the past that were addressed are still on the franchise registry. Those documents are still available. And that's, again, one of the benefits of using the registry to help you in that process. So those are some of the main changes. Now, I thought we'd take a quick overview of the process, and we're going to look at this slide again in a bit, just to go through the process here. So the loan comes in and you have a deal to look at. The first thing to do is to get the franchisor contact information. Understand what is this brand, what's going on, search them on the registry. You're going to be able to find contact information for the SBA contact, meaning who is the person at the brand responsible for signing the standard addendum and getting you the documents you need to process. There's an underwriting contact there on the registry. That's someone there to answer any questions that you might have from an underwriting perspective. Maybe you saw something in the franchise disclosure document with open and closed units that you wanted to ask about. Maybe the borrower is coming to you with some numbers that look a little fishy. You want to check up on those. That's there for that. And then there's also a franchise sales contact. So if you've maybe done some deals to a brand and want to talk about maybe a transfer financing or a remodeling financing program that you heard about or read about, that would be someone to contact about that. But it's important to get that contact information early so we can facilitate this process. The second thing is to determine, okay, what is this brand? Is it a franchise? Is it a franchise according to the FTC definition? Or is it a non-franchise concept, license agreement, dealer agreement, jobber agreement? And I'm going to need to do a little work to understand what this is. The easiest way to understand that is just, look at the agreement that the borrower had. If it's a franchise agreement, it follows there's going to be it's going to be a franchise. And in those cases, also always ask for the franchise disclosure document from the borrower. We're going to show you that that's available on the franchise registry as well, but it's always good to make sure that, if the borrower has it, they can submit it to you as well. That's going to have great information there, and that's going to tell you right away that, yes, this is an FTC franchise. Then we want to look at the affiliation preference for the franchisor. Do they want to use the standard addendum, or do they want to use the previously approved document that might be available on the registry? And then we're going to look at, is the franchise business eligible based on their business model? Do they have any other eligibility issues like we talked about? The gender discrimination issue from Curves was the example that we just gave before. And then are there any other SBA requirements along those lines? Do they need to sign an affidavit to prove that they have bathrooms and changing rooms? What's the status there? That's the process that you should be going through. The franchise registry is going to take you through that, and we're going to take an example of that and show you exactly what you're going to get from the registry from an SBA perspective. Want to take some time here while we're talking about the steps of the loan to kind of talk about underwriting as well. because there is the SBA section on the registry and there's great info there. And it makes the process easy, but sometimes we bypass some of the free underwriting tools that are available on the site. And really the message here is to make sure that you as a prudent lender are including all the publicly available information, everything that you have at your fingertips in this underwriting process and in your eventual loan file. Now, if you're a PLP lender, you're collecting that information in-house and holding it. If you're a GP, general processing lender, you're submitting that as a package to the SBA. But some of this information is really great to look at and have in your file. The first thing that's available on the site is the franchise disclosure document, the most recent FDD that's available for the brand. This is available in the underwriting section, and we're going to take a look in a bit and show you exactly where to get that. But so the most recent FDD, so right now is kind of FDD season, as we call it, for brands. Brands are submitting their new franchise disclosure documents around April and May. That's going to have great info in there. For open and closed units, it's going to be able to give you the last 3 years of unit opens and closures, so you can kind of get a snapshot of what's going on there. Item 19 is going to have P&L information most of the time for units, both franchise and company-owned units, and you also get franchisor financial information in item 21. This is all in the franchise disclosure document. If you do nothing more than grab that FDD and put it in your file, you're going to be going a long way to making sure you're following prudent lending practices and making sure you're covered in the case of an issue with the SBA. Other available information on the registry is the bank credit report. That's an independent credit risk analysis that's prepared with confidential information from franchisors. That's something that's available for free. It's actually paid for by brands to make sure that they have information out there. Now, not every brand, as you might imagine, is going to have a bank credit report. And we like to say that there's kind of a natural selection process where some of the better brands are the ones getting bank credit reports, but not always the case. There are some brands on there that have had some troubled times and have turned some things around and want to show that to lenders. They want to have that see-through to their financial information. So always be looking for a bank credit report. Then there's also a fund report available, and those are paid for by lenders, and that's created with with publicly available information, no confidential information from the franchisor. That's a case where the franchisor, maybe we haven't done a bank credit report on them, and we're able to provide a fund report, which is created with all the FDD information we have. We have about 10 years of FDDs on every brand, so we have a very good history on those. And that's built around a franchise score. So more in the vein of kind of a FICO score in terms of being able to score a franchise. Whereas the bank credit report is just going to give you the nitty gritty. We're going to give you lots of data. We're going to give you great information, and we're going to let you make the decisions and the judgments about the brand. Whereas with the fund report, we're taking more of a projective stance and having a score and actually scoring the brand and telling you what we think. So that's some information there. And also being able to assess what the brand is doing in their special provisions for franchises. This is something we're going to talk about in a little bit as well. You folks may have used the special provisions with some deals and maybe some not with others. What we're doing with the registry this year is kind of eliciting what do the franchise brands feel about those special provisions and putting that up there on the franchise registry site for you. So there's not going to be any surprises as you move towards closing, asking the franchisor to sign some language that they, wouldn't want to sign. So quick note on underwriting there. Wanted to just take a look just back at the SBA policy notice that came out in February and just kind of coalesce what happened there. The policy notice came out in February, and it made an addition to the procedure of using the standard addendum for Form 2462. Like we talked about, there were some franchisors that had issues with the language, and that's understandable because a lot of these brands spent a lot of time and a lot of effort talking with the SBA, having individual negotiations to get a custom addendum and eligibility that worked for their brand. So it was kind of a shock, and some of them were upset when the new standard addendum came out. Now, there were some brands, obviously, that loved it and said, hey, we just sign it and we go. But some other brands went to some great lengths. An example of that is an insurance brand, and we talked about the transfer issue, having the franchisor not unreasonably withhold consent to transfer or sell the business. Well, This particular brand had the only issue they ever had was this transfer issue. It wasn't an issue. They never withheld consent to transfer, but the SBA requires it to be specifically in writing. So they had a customized addendum with one line that said, okay, we're not going to unreasonably withhold consent, and that was good. So they were fine and happy. But when this new addendum process came out, now they're being asked to sign up to 3 other items in the standard addendum that weren't included in their previous addendum. So that was part of the issue that was raised. So SBA said, okay, if you had a previously approved addendum for 2015 or 2016 on the franchise registry, or anywhere, in fact, it didn't actually have to be on the franchise registry, any addendum from 15 or 16 will allow you to use that, but you're going to have to sign the certification, and that's going to be Form 2463. Now, those of you that are familiar with using the franchise registry in the past, you were familiar with this certificate and addendum process where you'd get a certificate of franchise documents and for a specific agreement year, and then you would get an addendum to go with that, and that was kind of the 2 things that you needed. This form is different from the certificate of franchise documents. That form is no longer used. So when we say certification form 2463, we do not mean the certificate of franchise documents. That form has been retired. This is a certification form that's somewhat similar to a certificate of no material or non-material change, which some of you may be familiar with. Basically, the certification form, the new form says that it asks the franchisor to attest that they did in fact have an approved addendum from 2015 and that they're using it, and it references that. And then it goes on to say that there have been no changes from the approved language that was referenced, that was at fault or at issue with the SBA in the approved year against the current addenda or current agreement, meaning the borrower's current agreement. So it doesn't necessarily have to be the 2017 agreement. It means the current agreement that the borrower is using. And this is a question I've had from some lenders. They're saying, well, okay, we're allowed to use an addendum from 2015 or 2016. What happens if I have a deal that was signed in 2010 and the borrower is doing working capital or something like that? You can still use the previously approved document from 15 or 16. The franchisor just has to be able to sign the certification to say that there were no changes against that. So that's the process. The natural question that comes up is, well, what's going to happen, as time goes on and these addendums and documents get farther and farther away from the approved agreements in 15 and 16? The answer is there is no answer. To stay tuned to us as we stay tuned to the SBA. We'll be passing you along that information through webinars and other communications through email as that stuff starts to unfold. So we're keeping an eye on it. We'll make sure that you guys are well informed as well. We also deal with a lot of franchisors, as you know. And I'm sure some of you lenders out there had some varying feelings about the changes, thinking it might be positive, might be negative, or uncertain. We also pulled some franchisors, and you can see that the majority of the franchisors were uncertain about the changes. And some of them, in fact, had not actually reviewed the documents when we had reached out to them. So there's a lot of different sentiment in the franchise community, as you might imagine. They've been providing, the franchisors have been providing us with a lot of extensive feedback, and as well, we've gotten that feedback from lenders, and we've taken all those issues in. We've been collecting them and referring them to groups like the IFA for future conversation with the SBA. So all this information is being collected, and all the feedback we get from you guys is really positive and really important. Again, the main reaction falls into 3 categories. We've seen concerns, we've seen positive feedback, and we've had unresolved questions from brands. Most of the unresolved questions are about the addendum and what's going to happen, kind of like what's going to happen in the future. And now, because they put out the new addendum or the new process in January, and then, 6 weeks later, we had an update. It's been fairly calm since then. We're about 3 months or so out from that update in February, and there hasn't been too much turmoil. But the same kind of questions we're getting from lenders, we're getting from franchisors: what's going to happen in 6 months? What happens when my documents change? All that good stuff that comes up. Some brands have issues with the one-size-fits-all addendum because it doesn't afford them the opportunity to clarify their franchise agreements. We talked about the example with insurance, only needing the only needing the unreasonable right to withhold consent, and other issues with restricted covenants, with the employment issue. The fourth line of the addendum speaks to joint employment, and that's run afoul of some franchise brands in the joint or the temporary employment industry. There's lots of questions. And we're going to be staying tuned to that. So just keep in touch with us. Of course, we're going to be talking about some great features on the registry for notifications and getting regular emails on this stuff too. So make sure that you pay attention and stay up to date on that. This actually takes us to a great question. Is the franchise registry going away? The answer is a resounding no. I see a lot of folks joined in here that I recognize, a lot of names that I've spoken to. So you're used to hearing from me. You will continue to do so. The way the original SOP update was worded in January kind of made it sound like the registry was being shut down and that the SBA was closing it down in some way. The registry is a private website. We've always owned the website. We've always operated it. We did have a partnership with SBA. They've altered that relationship, although our relationship with the SBA in general is still quite strong. So the site's not going away. Everything that's been there is going to continue to be on there. All the historical reviews are going to be there, and we feel that in times like this when things are changing and we're kind of changing direction left and right, it's important to have that backlog of historical documents to kind of see like, hey, what happened in the past, and that stuff's still going to be up there. So don't think you have to go up and download a bunch of older addendums and all that. It's still going to be hosted and it's going to be there. And all the underwriting tools and info that you're used to, the franchise disclosure documents, bank credit reports, all that great stuff is still going to be on the registry. So no worries, that's going to be there. So now that it is there, let's talk about how we're changing the registry to help you address all these issues that we just talked about in the SOP process for this year. I want to dive right in, take a look at the Sba Eligibility section. But before we do, what we're looking at here is the home page of a brand. So when you do a search on the franchise registry, you hit on a brand, you're going to be deposited on the General tab. And this contains all the contact info that we spoke about before, the SBA, franchise financing, and franchise sales contacts. There's also some good information there. The funds number is there. Now, if you did have access to an institutional subscription access to the registry, then you would have the ability to download the fund report directly from the General tab as well as Underwriting, and the fund score is there. We're going to look at some of the search features in a bit. Some of the really powerful tools that enable you to kind of leverage the fund score in your underwriting and business development searches. But so you're deposited right on the General tab, great information about the brand, and then you'll see on the far right, there's a tab that says SBA. All this stuff hasn't changed. So if you've done this in the past, this is the same process. Search the brand, look for the SBA tab, click on that. Here's where things start to change a little bit. We have changed the site now. In the past, you may have been familiar with looking up the year of the agreement and proceeding from there. Now we're going into the 4 bullet points right away that you have to determine for eligibility. Number 1, is the brand a franchise according to the FTC definition? If the brand has a membership with us, has an active membership, we're going to determine this for you. So it's going to be right there. And the 3 points are there. Actually, I'm not going to go through and read those, but those are the three bullet points of what actually makes an FTC franchise a franchise and actually to meet their definition. So if it's a yes, it's a yes. Boom. If it's a no, okay, then it's not a franchise. You don't need to apply the standard addendum 2462. Now, obviously, this is the franchise registry, so most of them are going to be a franchise, but there are going to be some other ones on there that aren't a franchise. And why would they be on our site? Well, because they want to let lenders know what's going on. We're not a franchise, and they want to have their contact information. Lots of reasons why a brand would be on the site. Now, it could also say unverified. If it says unverified, that means that they don't have an active registry membership, so we can't verify it. But we can help go verify it. So if you get an unverified, shoot us an email. You can send me an email or give us a call. We can call the brand. We can get them on the registry. It's a quick process. We'll get through and make sure that they have everything. Secondly, okay, now it's an FTC franchise. What are we going to do? Well, we have 2 options. We have Form 2462, the standard addendum, but what if the brand wants to use a previously approved? For every brand that's on our site, we have already determined that. We've talked to the brand, we've talked to their contacts, and we're putting it up there. So if it's a standard addendum, it's going to show. If They want to use a previously approved document. We're going to tell you which one it is. In this case, Arby's is using the 2016 approved document, and we're going to have the certification form 2463 that goes with the addendum. So that's going to be right there. So just, again, we were talking about certificates and addendums before, and I skipped over this point, but the big change is that if you're using the standard addendum, 2462, there's no certification for it. You don't need one. And so that's a big change. And again, you're used to certificate and addendum. Don't go looking for a certificate of franchise documents or something else. If you're using the standard addendum form 2462, you do not need a certificate. It's by itself. But of course, if you're using a previously approved document, you will need the certificate. And that's the certification, not the certificate. All right. Now, the next is business eligibility issues. So we're going to say, okay, do they have any of these other issues that we talked about? And this shows you actually all the ones that are there. Are they organized as a nonprofit? Are we a passive business? All these other different things that are not eligible, that are beyond just the scope of affiliation. Again, if the brand's on our site, if they're a member, we're going to do the review, just like we do for these other issues every year, and we're going to let you know whether they're eligible or not. This is important. So if it's unverified, then we will go ahead and update that for you. I'm going to note that there might be a little feedback here. Okay. Now, once we determine business eligibility, the fourth thing is, are there any other SBA requirements? Right? Are we talking about the example that we had before with curves? Do we have any other documents that we need to get that aren't related to affiliation? If they've had them in the past or they need them in the future, we're going to have them there for you. And then we're also going to give you the franchisor stance on the special provisions for franchises. Now, most of you are familiar with what those are. Special provisions are basically language in the Sba SOP that may or may not be used by a lender. They're recommended in the case of a franchise. It has language having to do with giving notice, the franchisor giving you notice of intent to close or to cancel the franchise agreement with the brand, or the borrower, giving the lender the ability to cure any defaults and step in. I actually was at a lender conference a couple of weeks ago and heard some really funny stories from lenders that actually had to step in and take over businesses, and the lengths that they went to do stuff like that. So that will be available. So if there's anything the franchisor will absolutely not be willing to do, that's going to be shown for you there. And that's super important if you're not going to do a deal unless you have access to the franchisor's books and records, and that you're absolutely going to get notified if the franchisor wants to cancel a loan or the franchise agreement. It'd be helpful to know that until getting to the end and not knowing. So make sure you don't waste your time doing a lot of work. Now, at the very bottom of this, you're going to see all historical SBA documentation. This is where you access historical documents, where you can see certificates, addendums, anything that was approved on the registry for 2016 and prior. That's going to be right there at the bottom. But just know that none of this is used in the current process. So it's there purely for your reference. You don't need to go fishing in there for anything. Again, you do not need to use the certificate of franchise documents for anything. But it's good for reference if you're looking at an old file, if you're doing a repair, if you want to see what was on the registry in 2014, what did my guy or whoever do on that, that's there. That's there for you. Just right to the bottom. And that's going to function as you remember it, 4-digit year of the agreement, or you can choose some available years to see everything that's available. Any questions on this, if you weren't familiar with that, just give us a call and we can help you sort through that. All right, so back to our chart from before. This is the SBA process again, and we just went through the different, basically the 4 areas and how the registry helps you. First, we're going to look at, is the brand an FTC franchise? Yes or no? If it's a yes, what's the franchisor affiliation preference, right? Are we signing the standard addendum, or are we using a previously approved addendum? And then the questions of franchise business eligibility. Is the franchise, does it have any passive? Passive? Is it a religious discrimination? What are the franchise eligibility issues? Are there issues? And if there are issues, what are the fixes that are present for those? So that's the process. Once you go through that, you'll have everything you need. If there's any questions on this as you're going through the process, we're here for you to answer them. Just super important to just reach out to us if anything comes up. Most of the stuff, again, is pretty cut and dry because most of these brands are going to be a franchise. So I would say that if a borrower is coming to you talking about a franchise or making noise like they have it, just ask them the pertinent questions. Say, submit the agreement document to me. And if they're saying to you that it's a franchise, ask them for the franchise disclosure document. It's actually a federal law in the FTC franchise code that the borrower must have the franchise disclosure document no later than 14 days before they sign any agreements or pay any consideration. So, if they're asking you what is an FDD, well, they're probably not a franchise and they have a license agreement or something like that, or they haven't gotten the document and you want to make sure that they've gotten it on time and they're following the franchise rule. So that's an important thing to ask for from the borrower. All right, I want to take a look at some of the other tools and fun things that we have on the site to make things easier for you. The first thing is the portfolio, and this is to make sure that you are informed as soon as possible about the franchise brands that you regularly finance or have targeted to finance for 2017 or just kind of have in your pipeline. This is really, it makes it easy. So what you do is you search for a brand, you get deposited on the general tab that we saw before, and the top right, there's a button that says plus portfolio. And click on that button, it's going to add the brand to your portfolio on the franchise registry. And that allows you to build a screen here of established brands and emerging brands here that you're searching for. And this makes it really easy to just assess what's going on with the basics. Is there a bank credit report available? Boom, you can download it. FDDs, you're going to have FDDs for pretty much everybody that's a franchise. Of course, BCRs are less common. And then SBA documentation is there as well. So you can have quick links to see what's available. Again, if you are subscribed to the registry institutional subscription, the fund scores are there, easily available, and some of the data that's available, the unit information is there. We have a whole bunch of unit information that's available on the registry that we're not actually going to be able to look at in this presentation. So if this kind of stuff interests you, if you're seeing scores, you're seeing numbers, you like this kind of stuff, email me after the call. We can get you a presentation and a kind of look through what's available and do kind of an in-person call on that. So really exciting stuff there. Make sure you pay attention to that. One of the great things, though, about having the portfolio is the notifications tool. So once your brands are added in to your portfolio, you can change notifications. So this allows you to get great information on the brand. When there's a new FDD coming available, that's something I get just emails from lenders. Do you have the new 2017 FDD? Well, we've got notifications. So any brand that's in your portfolio, you can say, update me when there's a new FDD, when there's a change in SBA information or contact information. Is there a new fund report or bank credit report available? All that stuff's there. And you can change the frequency because we don't want to overwhelm you with emails. I like to get emails from our marketing assistant, Nancy, every day, but you might not want them that often. So if you don't want to hear from us every week, you want to hear from us every month, you can certainly change that from there. And this is just a great way to stay up to date and make sure that you're getting the info you need from the site. Another feature that's available is our advanced search, and that allows us to search through different criteria of a franchise. Now, some of the basic ones are available to everybody. You can search the minimum number of years of franchising, how many franchise units they have domestically, what states they're in, do they have SBA information on the registry. So that's some pretty powerful stuff that we're giving you there. Just be able to say, okay, give me all the brands that are 50 plus units, they're in 10 states, or maybe been in business for 20 years and have a yes on Sba eligibility, that you can pare down. The stuff that's there below this, next to a lock, that's the stuff that's available for our subscribers to the registry. So we can go really deeply in the searches. We'll look at continuity rates, fund scores. This is derivative stuff that we calculate and go into FDD and calculate growth rates. You can do searches by state, which is something that's really exciting as well. Once you have this stuff unlocked, all the state-specific data is on the franchise registry. So you can see concentrations of units by state. We can give you state-by-state success rates. So a lot of times the brand and other metrics, they're going to throw unit system-wide, whole system-wide success rates at you. So it's like, okay, Firehouse Subs has a 93% success rate. That's great. But what you look in the numbers, and if you look and you'll be like, okay, well, Texas and Florida, they're 100% success rate, and maybe Michigan has, 70% success rate. Not that those numbers are specific to this brand, but I've had lenders comment that that's something that's really powerful, because now the guy or the girl in Michigan can look and say, okay, well, you're 93% success rate, but in Michigan it's only 70%. So I'm going to tweak my loan. I'm going to up my rate. I want to make sure you have more working capital in the deal to make sure that we're going to account for this kind of stuff. So some of the really important and powerful tools that are available on the registry. Now we're going to look at a bit of a coming soon. This is stuff that we're working on here. This is the ability to rate the franchise brands, and it's something that we're really excited about and we're building right now. It's something that we've heard a lot of feedback from lenders about, that we don't really get a chance to share the information. We don't get a chance to share best practices, experiences, pitfalls with brands outside of these events that happen a couple of times a year. We're at a conference or at a trade meeting or something like that with our colleagues, but we don't really get to share this information. So this is something that's you're going to be seeing soon on the registry. It's going to be able to give you the opportunity to rate your experience with the brand, financing the brand, and leave some comments. This can be done anonymously. This can be done under your bank name. And, we're thinking about the good slant here. Of course, you're thinking, people can put nasty things on there and whatever. But really, this is about elevating best practices and making sure that the good actors and the good behaviors get elevated and distributed throughout the community. And those that aren't so good, people are made aware of that. So that's what we're looking at and hoping for with Rate the Brand. Look for that. Hopefully you'll join us in this community of lenders. And this is what this site's about. This is really a community of interest site. So you really get more out of it. The more that you put in, the more you'll get back. And again, if you see a brand that's unverified, make sure to reach out to us so we can reach out to that brand, get them on the site, and increase that community for you. It only helps the franchisors get better loans and make more loans for you. I want to do a quick update on the unique identifying number, the FRUNS number. You may be familiar with the FRUNS number. It's our unique coding system for franchises, and was up until January used exclusively by the SBA to track their loans to franchise brands. Now, I've gotten some differing feedback on how well this new SBA process is going. I do have some guidance that I've gotten from SBA on what to do if the FRUNS number, the old number, the franchise code, is not in the E-Tran system. In the past, we would send the FRUNS numbers to the SBA as we created them, and they would be available in the E-Tran system for you. I have a process I can email out to everyone that needs it. Just let me know. I've heard differing things. Sometimes it's working, sometimes it isn't. I'm working on this to try to get a resolution for those that are trying to put information into E-Tran and the FRUNS numbers just aren't there. Of the new SBA system. The FRUNS numbers, of course, are going to continue to be there, and that was the point of this slide, just to let everyone know that we're continuing to keep the FRUNS numbering system up to date. We put 250 to 300 new brands. These are franchise brands, new brands on the registry every year. So the FRUNS numbering system is continuing on. Some lenders out there are using our system to track loans to in their own portfolio. And we have a regular update that we give. We have a quarterly update that lenders can subscribe to for all the new franchise brands. So it's an emerging concept report that tells you all the new concepts that were created and what's happening there. That's going to continue on. So we're keeping an eye on the new process with SBA. It's one of those kind of wait and see deals. If anyone on the call here has had this issue and is looking for a resolution, just email me and I can give you the updates and the latest, and hopefully you can get your deal across the line if you're having any issues. So we spoke about this a bit before, but the most frequently asked question that I've gotten prior to the February notice was, did we think that this was going to be the final notice? So were there going to be any additional changes? We thought there were going to be more changes at that time because of the opposition that we saw from franchisors to the standard addendum. It turned out that there was an update. So the question is now, what's going to happen with this grandfathering of the old agreements? Is this temporary? Is this going to become permanent? What's going to be the new gyrations with this? Like we said before, the answer is anyone's guess. Stay tuned to us. We're going to let you know. We're going to be keeping in contact with our colleagues at SBA and making sure that it's as easy as possible for you guys when it happens. What we're going to continue to do for lenders at Frame Data is what we've always done. We've got all the business eligibility decisions that have been made by the SBA for the past 20 years. That's not going anywhere. That's still on the site. We're still going to help you determine whether the business model is eligible and all the other eligibility issues. And we're also going to have all the great underwriting information that you're used to. The franchise disclosure documents, bank credit reports that have always been there, fund reports that you may have seen. Those are for pay by lenders. Now, if you are thinking, oh, fund report, this is something new, I'm not really sure about that, email me as well. I can get you a free fund report on a brand that you might be working on, and we can discuss needs for your institution, whether that be an institutional subscription or maybe it's a few fund reports throughout the year. We have some bulk pricing options for those. A lot of options there. So we're still going to be integral to your process. Lenders are still going to come to the franchise registry to determine whether the franchisor is going to sign the new documents. We're always going to have that information there. We're also going to have the great info to make sure that you're doing deals with credit-worthy brands. So whenever you're ready to do a deal, make sure that you jump on the franchise registry and allow us to help you as best we can. All right. Thank you, everyone, for listening to the presentation. We're going to go ahead and take a look at some questions here. Just saw a couple of them. Got a question, where can we find the certification documentation prior to 2016? We touched on that a little bit. That is on the Sba Eligibility section at the very bottom. So that's still going to be there on the registry site. It's going to be available at the bottom. No longer used in the current process, but all that info is still going to be there if you have any questions about a deal that you may have done. A couple questions about handouts and stuff like that. We're going to have, of course, a recording of this session and all of the previous questions that we've had. We've collected all of the questions from previous webinars. We're going to send those out as well. So all that, you'll get the benefit of all the other sessions. And if anyone has any specific questions that maybe you don't feel like asking here on the webinar, please email me or give me a call. We can talk about whatever issues you're having. We can have a therapy session. We can have group therapy and maybe hopefully get through it together. All right. Hope everyone enjoyed the session. It's a little exit polling. All right. Thank you guys very much for attending. Really appreciate your time. And again, all the information's here, my telephone number, email address, reach out to me for anything that you need.